couple days ago, the Wall Street Journal did an article on the most crowded trades on the street. These are equities that are heavily owned by many funds. One such name is held by 60% of funds that were polled. Another such name has a weighting of 2.2 times its actual weight in the S&P. So we're going to take a look at 6 to 8 of these names in the next few minutes and see what the charts say about them, because if they crack important support and sellers start showing up, there may not be a lot of buyers to absorb that selling. Hi everyone, I'm Rick Bensignor from In the Know Trader, and this week for Dukascopy TV, we're going to take a look at some very overcrowded trades that exist in the market based upon an article in the Wall Street Journal just a couple days ago. Here's the graph that they put up, or a chart that shows these rather over-owned names. Take a look at Visa. It's saying that 60% of funds own this name. And if you look on the right-hand side, take a look at something like Salesforce.com, which is essentially weighted at 2.2% times, or 2.2 times its actual weight in the S&P. So let's take a look through these names in the next few minutes, and we'll see what the charts say. So let's start off here with Visa. Visa's this week made all-time highs. It does have a set of 9 count in DeMark terms. A couple weeks ago we had a sequential 13, so it would suggest that we're potentially late in the rally. We've seen some of these before, and we often get some minor pullbacks, so I probably wouldn't be adding new exposure to the name now. Should this Friday close underneath 176.5, and then next Monday we open lower from Friday's close, so we gap down and trade lower than this week's low, then you've probably got a move coming to 169-ish, which is not much, but potentially as much as 154 if the market gets going to the downside. The most important thing to look in these overcrowded names is if the market comes off and these become names that institutions want to start selling, there may not be buyers for them because they're already so overcrowded. So that's really the biggest challenge here, is what happens if these start coming off. Next one is Facebook. Facebook has not made all-time highs, which were done back in July of last year. By the way, these are all weekly charts. The key level down here now is about 164 or so. That's where you see multiple support levels that are unrelated to each other showing up right now. It's also just above the gap that took place in June, so that's kind of the level we're going to focus on now. If Facebook keeps going to the upside and makes new all-time highs, you've got a 236 or so target in here at the full propulsion exhaustion level here at the top of the screen. United Healthcare, also off its all-time highs. Notice the weekly sequential signal here. I'll put a little ellipse around it. This signal right in here, this 13 count, suggested upside exhaustion to the trend. Certainly it was a good call at the time. The stock pulled all the way back to its cloud bounce and eventually broke through its cloud, which puts you on big caution signal, but it is not a short signal by any means breaking through the cloud. It really puts you in a cautionary note, but we've managed to come back up into the cloud. So it's kind of neutral here. Upside target that's still beneath all-time highs would be about 279. Underneath, on a decline, kind of 226-ish or so would be some support at this point. Google, and we're going to use the Alshares GOOGL, potential triple top up here. Notice recently also set of 9 count near the bottom of the move. It's imperfect for those of you who know DeMark counts. There's a 13 signal here on the top. On the upside here, 1346 or so is upside target. Where am I concerned? On the downside, should this Friday close underneath 1200 and then gap lower Monday morning and take out this week's low, you're talking about potential move down to about 1147 or so as next support. Salesforce, CRM, struggling to get beyond the propulsion signal here in teal. So this has been in place all the way since November of last year. This model said that if we properly got through just about 141, we would get to 168. That is essentially where we've gotten to, and we continue to stall there. If we get above there, there's a much higher target up here at 222 that would take quite some time to get to, but in the long-term bullish structure of Salesforce, that's an upside target. Where do problems come in? If this week closes beneath, let's see here, we actually don't have, there is no near-term propulsion level on the downside. So there's nothing really close by here as far as a real warning sign. Now again, remember, this is one of the most overweighted names in portfolios at almost 2.2 times weight relative to what its weight is in the S&P. So there's been quite a bit of distribution here all the way this year. If this thing starts cooking on the downside for whatever reason, I'd say probably in the 125, 130 area or so is going to be your key support level. That's what you're going to want to see hold. Otherwise, you're probably going to need to lighten up in the name. MasterCard, all-time highs made this week. Again, last week or maybe it was 2 weeks ago, upside exhaustion signal. We are getting a pullback this week. Should Friday close beneath 270 and we open lower next Monday and take out this week's low, look for 256 next and a bigger decline all the way down to about 230. PayPal also, upside exhaustion signal showing here. It's confirmed on the one down this week. I don't have a clean propulsion signal on a further decline. Look for some support near 102 from the current 111 and change level. On the upside, anywhere from first initial resistance 117, and then potential, if we get through that and make new all-time highs, 132, next upside target. Adobe, all-time highs made a couple weeks ago. No exhaustion signals here yet, but last week was an up close. Should Friday close beneath 295 this week, we're trading 303, so we get negative news out of the Fed later today, and we close Friday under 294.5 or so. Look for a move down to 276, 277 next. And last one, that's again a very overcrowded trade name, is Booking, BKNG Booking Holdings. So this has really done very little for months. It's in a sideways pattern. Upside targets, and again, this is a very high price stock, 22.43 all the way up to 22.90. On the downside, if this Friday closes beneath 18.14 from the current 18.94 and gaps lower next Monday, and takes out this week's low, look for a move down to 16.58 as next support level. So the problem here again becomes what happens if sellers come into these names. And you have to realize that because they're so overcrowded. In fact, here, even if we just finish up here by looking at the type distribution this name has had over quite some time, it's really gone nowhere for a couple of years, so it's not partaken in the market. There's even a little bit of a head and shoulders pattern here. So the problem becomes if you get net sellers and there just aren't enough people to be able to absorb these overcrowded names, and that's the risk in owning them. So that's a quick look at them for this week. I'm Rick Bensignor for Dukas Copy and In the Know Trader. Thanks for watching.